G'day, welcome to the Financial Bloke Podcast, the podcast for people seeking the wisdom needed to grow their family's wealth and live a happier, healthier and more prosperous life. My name's Ben Law and I am the Financial Bloke. Today we have Matt Barton with us. Matt's a fifth generation farmer from Central New South Wales, but he's also a teacher, principal advisor and facilitator with RCS Australia. RCS is an integrated training, education and professional advice business who focuses solely on helping agricultural producers to best manage people, land and agricultural production systems. Matt went to boarding school in Sydney and then he studied accountancy and finance at university. Once out of uni, he worked in the financial markets in Sydney in the 1980s before holding a role as a corporate treasurer for a mid-tier mining company. He made the choice to return back to ag and came back to the family farming operation in Central New South Wales in the mid-1990s, and in 2007 he joined RCS. His time in Sydney provided extensive experience in the corporate and investment sectors, giving him the ability to engage, advise and also comment at both the producer level and the investor or corporate level. Today we're going to be discussing Matt's observations of the problems with corporate investment into Australian agriculture. So without further delay, welcome, Matt.
Yeah, thanks, Ben. Thanks for inviting me.
My pleasure, mate. It'll be a great conversation today. Now, I want to start off right at the beginning, and I want to know how a young fella from the bush that managed to establish a pretty lucrative career in the financial markets in Sydney in, the 1980s, where, there was lots of money to be made, let's be frank. Now, how did you escape the lure of the big time and come back to the family farm or choose to come back to the family farm, mate?
It was a pretty stressful environment. So I was getting woken up by London and New York, usually most nights, managing different portfolios for different traders. And that was incredibly wearing. I started to recognise that I wasn't a good trader. Now, what I mean by that is that the best traders I saw actually enjoyed the trading. It didn't matter if they were positive or negative. It was just the game. Whereas I actually worried. So I worried about taking profits. I worried about stopping losses. And I felt it a lot more. So I started to recognise that I wasn't in that right psychological space. And my father always said, look, there's no room for you here. And starting to get a bit of coin together, I thought, I wouldn't mind, if something comes next door, Dad, maybe we could buy it. And he basically said, do you want to come home? And so I did, and then got married soon after and had children here and do not regret a second of it.
I was going to say, do you regret it? Because, that's the worst thing you want to go to your grave with, isn't it?
Yeah, but I'm so thankful that I got pushed out, because I really did get pushed out. I'm an introvert, so I would have been very happy to stay at home. But by being pushed out and forced out of your comfort zone, I appreciate coming back so much more. The grass isn't greener on the other side. I've had a good look. Didn't suit me. And I was lucky enough to have the opportunity to take over the family farm.
And I mean, you built a huge amount of experience. I mean, not many people get to go and see the corporate end of town. I mean, I did it for a year when I was in London. I worked for a hedge fund over there and I sat beside all the currency traders. And I remember the CFO or the chief finance officer, she came and said, Ben, there's a spot here if you want to come and do this. And I looked at her and laughed and I said, I don't want to jump out the window after 5 years because it was hugely stressful. But with your accounting, finance, those sort of skills to come back to the farm must have been a unique set to start off with, I suppose.
It's interesting because my last CEO said, what a waste of education, because I did a lot of postgraduate stuff because I was coming back to the farm. He said, what a waste of education. And I can't disagree with him more in hindsight, that having that balance. And to be honest, expertise is only jargon, because once you understand the jargon, there's very little expertise there. And if you're confident enough, you ask questions. So, look, I just don't understand that, and it gets you so many places. But it's a jargon that's really the key. It seems to be the key.
It's interesting you say that, because in financial advice, when I started off, you didn't know the jargon, you were new to the industry, you were trying to do your best, and you would never want to look stupid by asking the questions.
Yes.
But the further I got along in my career and the more confident I got, the more stupid I was willing to look,
Yes.
asking the questions. And, if I had clients, I'd just say, look, I don't know the answer, but I'll find out. Or if I'd be at a training day, I'd say, what does that mean? That I don't get that, re-explain it. And 90% of the time, people in the audience would be thinking the same thing. So,
Absolutely.
a lot of people forget that.
Yeah, and I think, it's great from hindsight. I look a fair bit older, not a bit older than you, Ben, but if only I knew all this stuff 30 years ago that you gather now.
Yeah, wouldn't we all? That's what the curse of having plenty of years on the earth, isn't it?
That's right.
Yeah. Okay, now corporate ag's what we're here to talk about today, and corporate ag has been in agriculture for forever, I suppose you'd say. But it seems to me that it's sort of accelerating with the emergence of things like carbon credits, biodiversity credits, and I think also the sheer volume of capital looking for a place to call home. And super funds are a prime example of that. I haven't checked the numbers in a couple of years now, but it was like $1 trillion, almost $1 trillion, or just over $1 trillion in Australian super funds floating around, and that has to go somewhere. Now, the thing is what I've noticed over time as well is there's always exceptions, but it seems to me that very few investors that come into the ag space with a non-ag background or a non-agricultural specialisation, very few of them seem to succeed. Now, you've spent a lot of years doing this, so why do you think that's the case, Matt?
Yeah, no, well, first I'll go back to the first observation, because I think corporate agricultural absenteeism, absentee ownership, is a natural progression, because we're seeing a requirement for a lot of agricultural businesses to keep becoming more and more productive, lift the productivity rate. And so scale is a part of that. And I know with the comparative analysis, in about 2000, year 2000, something like that, it was about 10,000 DSE to one labour unit allowed you to be, to run a very profitable business. And by about year 2020, that had doubled or more than doubled. So I think it got up to around 20,000 DSE in the sort of 2018. Now, that's requiring family businesses, if they want to keep on that wave, I guess you'll call it, is to keep doubling their size every decade or decade and a half, which is unreasonable. And that's why I think that it's a natural progression to corporatisation. I was lucky enough to be introduced to this space because I can speak at the boardroom level and I can speak at the farm gate level. And what I quickly realised was that the managers, the guys on the ground that are running it, are excellent at the operational part of the business, usually top of the game. But it's the actual running of the business. No one's actually taught them how to run a business at a really strategic level. And then I looked at the investors, and the investors had no concept of agriculture. It took me a while to work out what was going on there. Why? Because a lot of these guys are incredibly smart. And I remember when I was working with the mining company, my CEO was the best CEO I ever worked under. He ran a really slick shop. But he had a property, because he knew I was from the land. He used to get me in there and we'll have a yarn. And the brain explosion after brain explosion that he had. And it's taken me a while to recognise that the issue seems to be with the investor side is they hate having no control. They have a lack of control in agriculture that I believe agriculture is the only industry I've seen where we have so little control. And what I mean by that, Ben, is that if most of us are in the commodity space, so we have no control over prices. We produce commodities and we are price takers. But also I'll broadly encompass dry land agriculture here, both grazing and cropping. We have no control over production. We really have to produce to what the season gives us. And that's the only industry I know where we have no control over the price, no control over the production. And I think that is incredibly unusual, and the investors and the absentee owners have an incredibly difficult issue with that. And I think the failings all stem from that start.
Sounds to me very much like the problem we won't run into with succession as well, which is the next generation is brought into and trained to become very good at production, but a lot of families fail to train the next generation on business management. So how to deal with the business side of agriculture.
Absolutely. And I've spoken with a few corporate managers, and I try and explain to them that it comes in two parts, I guess. You've got the strategic level, and I see this with farm owner-operated businesses and corporate businesses, that a lot of agricultural business are structurally unsound. So it's really hard to make a profit with these businesses in most conditions. And the second part of it is that if you're employer manager or you're a manager yourself, then to justify your position, you've got probably 5 to 10 decisions a year that you have to make in a timely and well-informed manner. And if you miss one or two of those, it can have a really significant impact on your business. And in the corporate sense, they're too caught up in the operations to worry about the strategic level and the decisions that they have to make, like destocking in a dry period or what are they going to do with their commodities in a cropping sense, and the flexibility around that.
So are investors from outside with these big amounts of money coming in, is there an error of, I suppose you'd say, information error in the sense that they're coming in just to make a capital gain? They're happy enough with the land capital gain to not worry about the profit. Do you find that, or is it just they aren't able to generate the profits?
I think it's a combination of both, Ben. So most investors that I see, and overseas or whatever, they assume basically that they're not going to make money because that's been the history of agriculture. And this becomes another issue with the danger I see in corporate agriculture, in that to be able to justify their returns to their investors, it's all about capital gain. They ignore the operational side. Their profitability on the operational side is generally poor.
Is it secondary, I suppose?
Secondary, yeah. And why should they be surprised when they're paying managers peanuts to manage these huge assets? It doesn't happen in the city. But then to be able to show the investors their returns, they have to keep turning over those places. So you'll see that they keep getting sold. So a corporate will buy one and sell it 7, 10, 12 years later. Usually another corporate goes in because of the scale. And it's this cycle. And what that cycle, I believe, is doing is breaking that connect. So they're not recognising their natural resource as an intergenerational resource. Everything's very short term. So they'll give it a go, try and make some profit. They'll spend a lot of money in the capital, decide they're not, so they'll sell it to get their investors a bit of a return. And there's no care taken with that intergenerational resource, which is inherent with most owner-operators that have been there for some time.
And do you think that's just a natural response to, that's the way the corporate world works? I mean, their objective is to maximise the returns for the shareholders, and therefore, they come in, they make their profit, they leave. That's just a natural part of the corporate or the business world, is it not?
Yeah, it pretty is. I would suggest, though, it's a pretty poor investment if all you're looking for is the capital gain on agricultural land, because I believe that agricultural land hasn't kept up with the capital gain on most other assets, your residential real estate, your shares, anything else. And you need to actually make up a healthy profit to match those shares and residential real estate. And they're passive. You don't have to get out of bed.
Yeah, it's a different. So your experience has been is that in many cases the non-farming assets, obviously there's always exceptions to rules, but the non-farming assets are performing better long-term than the farming assets. Because I know a lot of people have said to me over the years, farmland has performed far better than any other asset, and I can make more money out of that. I just hear that randomly from people from time to time, and I don't have any evidence for or against it. And so your experience is that you've seen it the other way around?
Seen it the other way around. So my experience has come when my father bought his first apartment in Sydney. It was a really poor investment because he could have bought a terrace house for the same money, but made a rational decision. Looked at the terrace house, too much upkeep, so went for an apartment. And that apartment has gone up in multiples, whereas the agricultural land hasn't gone up near as much in the last 50, 60 years. And it's a huge disconnect. So I think, a lot of us don't have, especially if you've been multi-generational on farms, consider the wealth that our grandfathers and great-grandfathers had in holding the land, and that's disappeared. So now I'm seeing next-door neighbours that are turning up, and it's a property that could probably support a farming family. But now these people are coming in and they're buying it like a beach house. It's somewhere they can come to the weekend, the kids can ride the bike, they'll play around with cattle or whatever else. But it is literally a holiday spot. And I think that gives us a pretty good indication of where the asset value has grown the most.
So is corporate or outside investors a net good for agriculture or a negative, do you think?
That's a really good question, and I don't know if I've got the answer. I will say that it's a natural progression, that it's part and parcel, as I say before, where for us to keep our productivity levels, we have to keep chasing scale to some degree.
Is that something you've seen in the past? Is that at the moment we seem to be in a position where you're right, we see this turnover, we need more scale, and then the capital required to do that is substantial. I mean, 20 years ago, if you spent $5 million, you'd have got a huge property. Now, if you spend $5 million, it may not even be a livable area. So the amount of money needed, and in many cases, the only people that are able to afford those sustainably are either the big producers or people with some sort of off-farm income or someone that's got a big chunk of money that needs to go to. So have you seen anything historically that sort of represents what we're seeing now?
Well, it's interesting. I've read a really interesting book. So I've been interested in this space for a while. I haven't really worked in it, but I've advised in it a bit. And it's concerned me. And I read a book 15 years ago, and I keep rereading it. It's David Montgomery, Dirt. And he's an archaeological geologist. So he basically studies where soil has moved through erosion or salinity or everything else, and studying the collapse of civilizations and going, from the Fertile Crescent to the Roman Empire, the Greek Empire, even over to the Americas and to Asia. And he explains that agriculture was one of the best documented areas of those civilizations because those civilizations were so close to famine at any one time. And the failure of those civilizations has always come down to agriculture. We pretty much accept that. Although it hasn't been the common thread, one was salinity, another one was erosion, all these different fundamental causes. But what I found fascinating was that there was one common denominator in the records that David Montgomery found, and that was with absentee ownership or corporatisation. And if I can just read one of the quotes that came out, and this is after, there's everyone, he seemed to come out with these quotes, but it was Pliny the Elder, and he died in AD 79. And he said he attributed the decline of Roman agriculture to city-dwelling landlords leaving large tracts of land in the hand of overseers. And he also decried the practice of going cash crops for the highest profit at the exclusion of good husbandry. And he'd seen that with civilization after civilization after civilization. I think it's incredibly important because now, Ben, we are seeing the corporatisation of agriculture at a global scale. So it's not just isolated civilizations over the face of the earth. It's at a corporate scale, and it involves all the bits that we're talking about, but it all comes down to that stewardship of the soil and not treating the soil as a multi-generational resource. It just becomes an economic resource. And you ask for a positive or a negative with corporate agriculture. That's my concern, my huge concern. A positive is I don't see many. We need to approach it. We need to approach it in a different method, or I think that it will have a huge negative effect on all of society. And so it's encompassing the land degradation, all the other aspects of agriculture that we know aren't positive over the longer term, seems to be encapsulated in this corporate model. And it seems that allows it to go forward unhindered, I guess. If that makes sense.
It does. And I mean, we're seeing, like I said before, a huge amount of capital's flowing into the agricultural space at the moment. I've got a number of friends that I knew back when I worked for the hedge fund in London, and people that are working in, very large fund managers. And they're all saying there's a huge amount of money that's just floating around looking for a home in agriculture. And that's for all different reasons, which means that there's a continual flow in which keeps prices high, which means it makes it harder for, farming families to grow that operation, like you said, to double the size every 10 years. And so what's missing, do you think, in corporate ag to be able to make it a really positive outcome for investors and for the community as a whole? Today's episode is brought to you by AgriCoach. You've worked bloody hard over the years and you've built a solid operation. But as your children grow up and start their own journeys, you're beginning to think about the next 5, 10, and even 15 years and how to keep driving the business forward and ensure a smooth and successful succession plan. Preparing the business, preparing the next generation, and preparing for your eventual retirement all requires a solid plan and a proven process. Unsure about the right steps to take? Head on over to agricoach.com.au/webinar to learn more about our Succession Proof Your Family webinar. AgriCoach, aligning families, growing wealth, and protecting legacies. And now, let's get back to the episode.
One of the first things I'd like to change is how we bring managers up into their space. So I think the farm managers should have a lot bigger role in the investment decisions. And this is a real generalisation, but a really good example I see close here is that there's been an aggregation made by corporate. It's since changed hands twice, I think, in the last 10 years. And it's an aggregation for cropping. And I'm going to be totally honest here, I think the country's going backwards. We're seeing a lot of salinity pop up and everything else. And I think any land manager would be going, oh man, what's going on here? We've got to try and maybe we need a pasture phase or something else. And I'm guessing here, but I'm guessing go to the investors and say, hang on, no, we've got a cropping investment. We must be cropping. And there's this, it's not flexible enough. One of the highlights I see with carbon, and this is following on with Terry McCosker, that if carbon becomes a thing, then land stewardship becomes a default, that we will automatically have land stewardship if we want to capitalise on that carbon. And that, I think, will have a really positive effect on these aggregations, saying, well, we want to be in the carbon space, so we've got to follow these principles to be able to achieve that.
Do you think, though, that will be skewed in the sense that, it's easier for them to just say, we'll buy that block of land, we'll lock it up. It's too hard to manage the in inverted commas, the carbon project. We'll just lock it up and then we'll have more and more and more country that becomes totally unproductive.
Oh, that's terrifying. And I think there's enough press coming out now saying that isn't the way to go. I know I was showing a video of southwestern Queensland where they've got mulga. And on one side of the fence, it was mulga, they trim for when they're in a dry period to feed the animals. And then they panned to the other one where it had been locked up for 15, 20 years. And where it had been locked up for 15 to 20 years, it was an ecological disaster. Things were dying. There was nothing growing, nothing. And I think that's been fundamentally shown through Alan Savory and his brittleness scale. And we've got to become a lot more aware of that locking up brittle country actually sends it back very, very quickly. It's a bit like the methane debate. It's very shallow and uninformed, in my opinion.
And I mean, if you look at what's happening overseas at the moment, I mean, talk about reducing the use of fertilisers. I know definitely in countries like the Netherlands, etc. We saw what happened in Sri Lanka, and then talking about locking up land. I mean, it's a major problem. And I think trying to get, like, corporations or investors are driven by investment returns. That's the end of the day. I mean, we see these new, ESG funds, but at the end of the day, most of them want to make a return, and we've got to try and show them the value of, as you said, that stewardship of the land, because very few people outside of agriculture truly understand what that looks like, do they?
No, I was trying to explain it to a well-known journalist the other day and saw the eyes glaze over within a minute. I thought, well, probably it's a reflection on me more than anything, but, how do you explain it in the elevator pitch? And that's what concerns me. It's the profitability. So there's no correlation between profit and production. And I think that's what a lot of us need to understand, that just because you produce the most doesn't mean that you're the most profitable. It has no bearing whatsoever. It's the actual cost of production. So a lot of the cases I see with highly profitable businesses is that they've taken out a lot of those outside costs out and generally running a simple business. So there's a lot of ways to skin a cat.
There is. And look, in my experience dealing with larger corporations or people outside the ag industry, is they like to overcomplicate things. That's the reality I came to years ago, is everything is overcomplicated. And if it's not complicated, you must not be doing a good enough job. The simple solution is sometimes seen as absurd. I know when we first had a conversation about this topic, you mentioned that, one of the most profitable graziers, I think it was, had the most simple production you'd ever seen in your career. Yeah. And so is there an element of overcomplication in the corporate space? Absolutely.
In agriculture generally, I think. And I'm an absolute admirer of those guys that can keep so many management balls in the air. Because I view one of the biggest risks in agriculture is management risk. What happens if one of those balls falls out? But I think one of the best things I've seen with a corporate manager, or actually an absentee owner for agriculture, was that his managers would come with a new idea, and his first question would always be, is this going to make the business simpler? And if it was going to make it more complicated, then he wasn't interested. And I thought, what a magnificent hurdle to have straight up. And we could all use that, I think.
Absolutely, yeah. And so you do definitely see the correlation between simplicity and better results?
Generally, yes, absolutely, especially in the dry land space, yeah.
For sure. And I mean, if you look at any investors, I mean, their simplicity is the return. It's like, what money have I made this year, or what capital gain have I made? They're not necessarily worried about all the other bits and pieces. So I assume there's some dysfunction between being able to communicate what a good result looks like.
Yeah, that's a great point, Ben. I think half of it's to do with visuals. So what is a well-run place? Is a well-run place one that, has painted fences and everything's smick and you've got beautiful monocultures everywhere? Or is a well-run place just one that, a lot of people say it looks rubbish, they've got all these different grasses and the fences aren't good enough and everything else. And so I see that perception as one of the major hurdles, where the investors will want to go out and see a pretty place. And that doesn't necessarily mean profit. It probably means the reverse.
Well, they want to be able to see their investment looks tidy, looks neat.
That's right.
And it appeals. So you mentioned about management, and obviously that's the world's problems for most businesses, is trying to find the right talent. And I remember in financial advice when I was doing that, succession for financial advisors was really tough. And that was because anyone that had any get up and go generally went and did their own thing. And I'm guessing that's potentially a reasonable good explanation in the ag industry, is Some people will just go out and have a go and do it themselves, and it doesn't matter what you pay them. They're probably not going to be enticed to come over and work for a big institution, are they?
That's right. No, that's right. However, I think it's swinging into the corporate ag space, because we've been talking about this before, where, to put together a viable agricultural property now, it takes a lot of capital. And so you'd hope that people come up and coming, they mightn't be able to get into that space, but they might be available for the corporate side. But where the real issue is that if they're showing any nous, they'll go and do something else. They'll go and run a small business or go into the corporate world. And that's where the corporate agriculture has got to say, no, we are going to provide the remuneration, the lifestyle, everything else that they require to stay in that space. Because it can be a challenging industry at times.
Without a doubt. And to be frank, I've seen a number of really super good producers that have actually been trying to raise capital from these corporate or super fund investors, and ones that I've seen that have incredibly good businesses and are very, very smart operators, but they don't necessarily have the corporate credentials, nor do they have the jargon, shall we say, or the technical specifications to be able to have the conversations. And a lot of corporate investors shy away from them because they don't necessarily have, shall we say, the look of the manager that they're looking to put in front of their board or their team of management.
Yeah, no, it's an interesting observation, isn't it, Ben? Why a lot of the investors don't try and jump on that. And I wonder a bit of it is also control. So a lot of these guys that try and raise capital still want to have the dominant or have control of the business, whereas the investor will see a danger in that. But I think developing that space, maybe even having a hybrid there somewhere, would be well worthwhile. Because then you've got a foot in each camp, haven't you, if we can make something like that work?
Without a doubt. So my question, I suppose, thinking about all this is, what do you foresee the problems are if we go through this cycle and more land is taken over by the absentee, shall we call absentee farmers? What's the potential risks of that, Matt, in your eyes?
Well, I think agriculture's facing a lot of critical issues, coming up to, I guess, the maturity of the industrialisation of agriculture that we need to address. And I think the corporatisation, because it makes it so much less flexible, will actually stop that transfer of knowledge, stop that transition into a more regenerative type space. So I think it'll speed up the deterioration of our natural resource, certainly over the short term. And if it's not addressed, then I can just see it going on and on. I just don't know where it'll stop. And I think it's part and parcel of a whole suite, but no one seems to talk about the issue that David Montgomery has observed.
And so if you're a young person or you're in the management space and you go, okay, well, look, I'm not going to get to go back on the land at home, or I want to go make my way in the world a different direction, and you decide you want to get into this corporate space managing, how do you prepare yourself to be a rock star in that space, do you think, Matt?
Yeah, that's interesting. I think you've really got to understand business and profit. And that's not just financial administration, where you can write a budget or you can, keep your accounts in order. It's more about the strategic direction of businesses and the risks associated. So there's not much space given to agricultural risk. And if it is, it's spoken about in very one-dimensional terms, whereas there's a lot of levels of risk that you need to take into account. So it's a strategic level, it's understanding profit, and it's understanding the risks that you're taking. And then I guess it's the key one that is out of the control of people that want to move into this space is having the investors that will back you up, because there's a lot of egos in the boardrooms, I've noticed, Ben.
Yeah, there is.
And they usually think they know best. They know best. And so it can take quite a strong personality to say, no, that's not right. So I see some great managers running businesses that are strategically unsound. what do?
What do you mean by strategically unsound, Matt?
There's a couple that come to mind that want to do the paddock to plate and going to extraordinary lengths to do the paddock to plate. And to do that, what they're doing is they're focusing on price risk and saying, we do not want to be a price taker, so we're going to make our own price. Well, that in effect isn't really true, because you're still, if you don't produce that item that week, then it's easily substituted for another bit of beef or lamb or whatever. And the definition of a commodity is easy substitution. So they're really focused on this price risk and saying, well, that's where we can make the money. Where in actual fact, that has increased their production risk exponentially. So what happens when you go through a dry period and you have to keep maintaining that production because that's what your consumers expect? And these businesses, one in mind, it's already blown up once. And so, no, we'll do it differently again. We'll go and find an irrigated place. And, oh, man, it just doesn't make sense.
Do you think it's that they're trying to reduce the price taking, or do you think it's just that they like the idea of, we're investing in a company that produces, let's just say, beef, and then we produce or we establish a brand that we can say is our brand, and it becomes a little bit of a visual thing for them rather than a price management? Or do you think it's a little bit of both?
I think it's a bit of both. I'd be surprised if they'd spend so much money just on the ego of having their own brand. I think they've put they've put a strategic thought behind it, but to me it's irrational, and they haven't really thought out the space and don't really understand the vagaries of agriculture. And they'll crash and burn again, without a doubt, unless they change. And yet they've got a fabulous manager underneath, and what a waste.
Well, that's the alignment. And that's what I talk to these people about that were trying to get corporate investors. Is my point to them is the hardest part for you is not getting capital, it's getting capital from the right people. And there's been a number of cases where people have raised capital from investors and that's all fallen apart very, very quickly because the investor doesn't understand the value that the operators or the people that have originally started the family business actually add.
I'd say that's right.
Or they don't appreciate it. And I hesitate to use the word, but I think there's a fair amount of a situation where there's a bit of snobbery in the sense that they're just country bumpkins that just running this farm that probably don't really understand our world. And there's an element of truth in some of it in the sense that, they haven't worked in funds management, they haven't worked in a corporate, so they don't understand all the jargon and the lingo, but it doesn't make them a dum-dum in any way, shape or form, and they're probably the right people to be listening to. But they just don't seem to be able to marry the two together.
Yeah, and I think there's a lot of psychological stuff there. A lot of farmers, we're all introverts. We don't, and we're probably not used to kicking heads at a boardroom level. And we all know there's a few psychopaths in that level. And, it can be very daunting and pretty darn dangerous sometimes. Yeah, so it's just a mismatch.
It is. And I know, knowing the people I know that are in funds management that are controlling the capital, the ones I know are great people. They're super smart, but they've got no bloody idea. They really have no idea, and they have no way to figure it out. They're trying to figure it out, and they're saying that, I've had conversations with them about certain aspects, and one I know, he listens to the podcast actually and has made the comment that he's learnt more. We talked about carbon credits and things like that with Terry, which is a really popular podcast. And he said, I just had no idea about a lot of that stuff. And I think that's a fairly normal response from the boardroom, isn't it?
Yeah, it always amazes me where they look for advice. So I've come across a few situations where the advice they're getting is from the agent that sold them the place, the real estate agent. I'll go, oh, no, the agent said this would be the best thing to do. And I'll go, what? This guy's never run a place in his life. What do you? And this can happen at, $30, $40 million scale. It's just crazy. So I think they've got to get the right advice. And usually the right advice isn't in the cities. There's a great example I had where I had a look at a property on behalf of an investor, and we got outbid by an overseas group. And literally they offered over twice what we thought it was worth. I thought, oh, well, good enough. And anyway, the person that was advising them was a Sydney firm with no agricultural background. Got rang up and said, how did you gauge the stock level? of what you think you'd be able to run. So hang on, mate, you go first. And so how did you gauge it, to advise that client? So we Googled it, the grazing potential of that place by more than double. And it went up to a court case 5 years later. But you're thinking, what? That's just madness,
Well, it's very easy to spend other people's money, isn't it, Matt?
Yeah, but you'd think that if you're going to spend that type of money, you'd say, well, right, where is the good advice? What am I trying to achieve? What is my strategic direction? Because I'm sure they do that with every other investment, I'd hope.
Yeah, but again, it's such a small drop in the ocean. I mean, you come out and you spend, let's say, $50 or even $100 million or $200 million on a property or an aggregation of property over here, and you're a sovereign wealth fund or a super fund. I mean, when I was in London, we were looking after money for American and Canadian super funds, and the minimum balance you had to have to invest was £100 million. Now, to them, it was an absolute drop in the ocean, and because they were looking after hundreds and hundreds and hundreds of billions of dollars across the market, and so they come over to Australia and they look at these investments. It's just a tiny amount to them. So the due diligence just potentially isn't there, and also too, you don't know who to ask. I mean, this is the thing. There's no directory for investors to come out or to get managers and go, well, how do we quantify, is this a good investment or not?
Mm-hmm. Yeah.
And they generally have to overpay.
Yeah. So, well, we better try and fix this up then, Ben, because I think it's a big hole there somewhere.
Exactly. And so what's just to sort of round this off, you've sat in the corporate boardroom, obviously. That's your original start, and you do that still now, talking and consulting. But what's the mindset of the people you're seeing that are managing, say, at a corporate level, these assets, or managing the capital that's to go into these sorts of assets?
Naivety would be one of the things that comes to mind, where, as we were talking about, they truly don't understand the asset. I think when I was in the same space 15 years ago, they didn't want anything to do with agricultural land, because they said, we're in the ag space, but they were in the DuPonts and the Incitec's and everything else. That was their ag space. And I was trying to explain to them that the land is the core. That's the base asset of society. Now they're showing a bit of an interest. I think they're probably cavalier and naive in a lot of instances. And you're dead right. Maybe you are a piss in the ocean, and who cares if you drop, $50 million in that transaction. What I care about is you might drop $50 million, but what's happening to that intergenerational resource, the asset, and that's the other side of it. Yeah.
Of course. And I think we have to be really clear that there's some bloody good operators in that space, some really smart people, some really ethical people doing some great things. We're probably generalising very much here, aren't we? It's like,
oh, yes, absolutely,
making some generalised comments. And I know I've come across a whole heap of really great operators in that space.
Oh, and I think it's one of the most exciting things I've seen in agriculture, especially now. I'm getting right off on some of these cropping stuff that's coming out, these where they're trying to get off that treadmill of inputs. And it is a really exciting space. You just watch this area in the next 10 years, it's blowing my mind.
So, Matt, we're getting sort of the end of our time frame. So, mate, I've got one question for you. If you were, say, 25-year-old Matt, and you were back at that time, and all of a sudden you decided agriculture is where you want to be, but Dad said you can't come home, and corporate ag was a space, and it was right now, would you be excited about the opportunities as a young person getting into that space? And how would you position yourself?
Yeah, I think I'd be very challenged to get into that space. I think it'd be a really challenging space to get into. It's not so much the on-ground knowledge that's in demand, because we can always get someone for $30 an hour to do a better job than I would. It's that strategic level. So if they're working for someone or working in a business, work out what you think their profitability is. Where do you think they could make a more profitable decision? Where can we start taking out the complexity? And once you start have a mind frame like that that's ticking all over, then you can really start, I believe it would develop a good framework for taking on that management role.
Yeah. So again, it'd be about going out, and I reckon it'd be about finding a good mentor, someone to learn from in those early years, and it may not be in the corporates to start with when you want to cut your teeth and get some experience. It's learning from really good quality people so that you can learn those operational and business skills.
Absolutely. No, you're right there. I think I missed that. And to go out and find the best, not the best, the most profitable operators you can find. And, my girls are just in uni now and they're doing internships. What's wrong with doing a 3-month internship? Because these guys probably don't need the labour. And just say, look, can I hang about? Can I just, chat it over? And the amount that you'll learn from that would be extraordinary.
Yeah, and start to learn. I think you got to start to learn also, like you mentioned, the corporate speak. Do an institute of company directors so you can understand how the directorships and those sorts of things work, and start to learn the jargon so that if you do go into that space, you can know what the shareholders are looking for or what the management teams are actually up the chain are actually looking for from you. Because my guess is you probably won't be given any trophies for being good at production. I think it'll be you'll be celebrated if you're good at production and you're able to sell yourself to the right people.
Yes, selling yourself is a big one. I don't know how to do that.
Most people don't. And it's usually the ones that aren't good at selling themselves that are the better operators in all walks of life. But I think it's, I was terrible at selling myself when I was younger, and probably still now. I'm my own worst critic. But I think that's something people should work on when they're younger, is to learn to be competent, but also be able to be, because there's a difference between confidence and arrogance. Confidence is backed by competence. Arrogance isn't. And then find a way to humbly be confident in being a bloody good operator and knowing that you don't know everything.
And I think one thing too I've learned, if I can just chuck this in, Ben, is enjoy being out of your comfort zone. So I've taken on a role as an educator, and I hate public speaking, but every time I get up there, so I'm getting myself out of my comfort zone, I'm getting better. And so start to crave that challenge, I guess.
Well, excellent, Matt. That's been a great conversation. I've really enjoyed that. I'm sure everyone listening has got some really good value. Now, this is one question I like to ask every guest. It comes up with some really interesting points, but what's your definition of true wealth?
Yeah, it's passion, it's love. It's interesting. When I was at Yuppie in Sydney, it was all about toys and dollars. And again, it's this old age, but it always astounds me because whenever I walk into a business, whether it's a corporate or it's a family, whatever, we ask for a vision because we can't help them make a decision if we don't know where they want to go. And out of all the visions that I've read, none talk about the toys, accumulating the toys. None are talking about dollars for dollars' sake. And it's all about family and it's all about passion. And I've been hit over the head enough with that to realise that is what's I feel my true wealth is the passion and the family, and everything else will look after itself.
I think that's a really valid point. And when we're young, we'll trade time and relationships for money. And as we get older, we'll definitely trade money for time and relationships, won't we? You never find anyone on there, or very few people, and I've had the privilege of dealing with people getting close to the end of their lives, and you very seldom find them when they start talking about that deal they wish they'd done earlier on, or the time they wish they'd spent in the office, or the extra dollars in their bank account. Very, very rare do they ever mention that. It's always the purpose, the passion, the relationships, and the ability to have something bigger than yourself.
Absolutely. Yeah, absolutely.
Excellent. Well, Matt, thank you very much for your time. Where can people get in contact with you if people want to find you, mate?
Yeah, no, I work with RCS, Resource Consulting Services, so that's with Terry McCosker and David McLean.
I'll put those in the show notes. And if anyone's got any questions or wants to have a conversation or wants to challenge us, we always like to be challenged.
Yes, please. I love to be challenged.
Yeah, me too. I'm still learning, and that's part of why I wanted to have this conversation with Matt today. I'm naive in this space, I suppose you'd say. So it's always good to hear from people that know far more than me. So yeah, if any questions or want to debate or challenge it, by all means, or reach out and tell us what you think.
No, well, thank you very much for having me on, Ben. I've really enjoyed it.
I have to say I've been humbled by all the positive feedback I've been getting from you, our listeners, and also how many of you have been forwarding the episodes to family or friends who might happen to benefit from each and every episode. It really helps spread the word and is a massive favour for us. So that's it for this week. Thanks for investing your time, and I'll see you in 2 weeks.